Greetings and good day. I hope you're doing great. I'm here with you for the daily Ethereum analysis on February 20th. We're currently looking at the daily time frame. As you can see, after the price reacted to the $1,750
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
support level, it bounced back up and is now in an accumulation phase. After the strong support we had in this area, the price is now fluctuating within this range and is gathering its internal liquidity here. This significant and powerful recovery from the support area unfortunately proved insufficient to initiate a sustained upward trend, primarily because the general prevailing sentiment and the collective mood across the cryptocurrency market continues to remain overwhelmingly negative and bearish. We are now looking at the chart of liquidity inflows and outflows to Ethereum ETF funds, and as you can see, there was a significant outflow of liquidity yesterday. The outflow of liquidity from ETF funds, along with the fear and greed index being in the extreme fear zone, is creating a negative sentiment in the cryptocurrency and Ethereum markets. We are currently analyzing the 4-hour time frame. In the past 2 weeks, the price of Ethereum has not been able to break out of the specified range between $196 and $255. Many investors in this market consider the current price to be a very good entry point for investing in the discount zones. However, as we mentioned, the negative market sentiment is preventing a large amount of capital from entering this market. The price of Ethereum rose to $2,038 on Wednesday following a price increase, reacted to the 50% line of the 4-hour FBG zone, and then dropped from that area. Afterwards, we saw a decline, and the price fell to $1,906, where the liquidity of the previous double bottoms is present. It reacted to this level and bounced back up. We are now looking at Ethereum's liquidity map. With the recent downward movement, significant liquidity has been taken from the $1,920 area, and now, as the nearest sell-side liquidity, we have the $1,900 price level. Meanwhile, the nearest buy-side liquidity is at $2,040, which is above the previous high. By examining these areas on the 1-hour time frame, we can see that the buy-side liquidity is above the previous high and located at the 50% line of the 1-hour FBG zone. On Wednesday, after Ethereum failed to close above its previous high, it started a downward move, and subsequently, we saw the formation of a new low for this trading week. The newly formed low is considered a bearish break of structure, and we can regard the top of this move as a 1-hour order block. As a result, as long as the price remains below this order block, we will look for opportunities to enter sell positions during any of the pullbacks. We can see that in the recent price movement during the pullback, the price is located in the area between the Fibonacci lines on the 1-hour time frame. In the last 2 candles, we can see that the price of Ethereum has swept the liquidity of its previous high and has once again returned to the area of this shadow. If this last candle does not close above the price of $19.65 and still shows us a pin bar pattern and a weak candle, we can enter a sell trade and target lower liquidity levels. This trade is also aligned with the market sentiment, and we can use a risk-to-reward ratio of 1.2 and 1.3 for the targets of this trade. Wishing you success and profits!